Hello there traders, welcome back to another Commitment FX video. Firstly, my sincere apologies for the time between my last upload and today's video. I have been working on a very exciting project behind the scenes, nothing related to Forex, so my time has been used elsewhere. But thank you guys for sticking by, and without further ado, we're going to get straight into this video where we're going to be looking at ways to increase your success in Forex trading by decreasing your risk. And how you go about doing that is building your confluences to give you that evidence that the trend is going in the direction that you want it to go in or that you think it's going to. So it's all about risk management and building up your bias, building up your story to enter that trade to the upside or the downside. So without further ado, let's get straight into the video. Let's go. So we're looking at US dollar JPY today. We're backtesting, of course, as usual, and there's a good reason for this. This is a pair which I like to trade because it follows the trend very nicely. The point being is, traders, is find a series of pairs, maybe 3, 4, 5, whichever you're comfortable with, and understand how they behave. I know that the USD JPY follows the trend for a very long period of time. We're talking months here, not days. So I know that when it's in an uptrend, it's likely to continue in the uptrend for some time. So with that in mind, what is going on the chart? So knowing how I know the JPY, we are in an upwards trend. So there's my first confluence. What is the overall trend? Zoom that out and just double check that indeed the trend is to the upside. Well, we can absolutely see it is. JPY had a very nice downwards trend all the way back till the end of beginning of 21, the beginning of 2021. Since the beginning of 2021, the USD JPY has been trading constantly to the upside ever since, to where we're now looking at the chart a few months back in November. So you can see how this trend has been going on for a long period of time. First confluence is the trend is the friend. I'm only going to be looking to move in the direction of the trend, which is here to the upside. So I'm looking to buy. There's my first trend, my first point, my first confluence as to why I should be entering this trade. The next point is we want to build our story, build our bias. So why are we looking to buy this market? Again, we know the price is moving to the upside. Is the trend holding at this point? Well, absolutely it is. Let's have a look. We had a series of highs here, followed by a higher low, because here was our initial low, and price continued to move to the upside. It created a higher high, it's created a higher low, and here we are again with a higher high. So we now anticipate the market to continue to the upside based on the fact that there's no signs that this trend is going to fizzle out. All we need to do now is identify when and where we're going to enter. Before we identify when, we want to build our bias, our confidence that the trend is actually going to continue. So we've identified that overall the trend is moving to the upside. We've identified that this is an upwards trend. We want to support that. What we do is we head over to what's called the Commitment of Traders data. If you're not a member, head over to the Commitment of Traders Club. I'll leave a link in the description. And what we do is we publish weekly Commitment of Traders data, which shows you where the institutions and banks are moving their money. Now, they're the ones making this market move. Looking over then on USD JPY, we're looking at the JPY chart here. And what we can see back in the end of last year, when the chart goes back to, is that the position size is massively to the short side. So minus 63k net positions was the last one posted here. Of course, we're back testing towards November. These are no longer available on our charts, although they can be. So we're looking now at minus 63k net positions. Well, what does that tell us? Well, this is telling us JPY against the USD. So the institutions are short on JPY USD. Now we're trading USD JPY, so we simply reverse the data, which tells us that they are massively long on USD JPY because they've made the Japanese yen extremely weak. You can see this. Overall, they've got 76,000 net positions in favor of short and 13,000 net positions in favor of long on the JPY. We're trading US dollar against the JPY, so that figures are reversed, showing that they're actually plus 63k positions long. So that's a support that we need to suggest that the banks are also looking to continue to weaken the JPY, which will therefore cause US dollar JPY to continue on our long trend. So we've got two confluences there that we are trading in the correct direction. The next thing we need to do, of course, is look at where we're going to enter. What I suggest you do is find a reason to enter. A very, very popular reason for myself and a very successful reason for myself is called the Fibonacci Retracement. You'll find it on TradingView. I've got it favorited down here. It's called the Fib Retracement. And what we do is we draw it from the previous low, which was here, to the current high, which was up here. And what you can see is I've highlighted a number, the 0.618. That's a percentage, of course. And what it is telling us is how deep this retracement is going to come back to. Why have I drawn it from here? Well, this was the impulse which created this higher high. It came from this area here. So why have I highlighted the 0.618? Well, from my own experiences, the deeper the pullback, the higher success rate of the continuation to the upside. What we can see here from our drawing from the low to the high is we've got the 0.236, the 382, the 0.5. And each level, this massive bearish candle, which was created here on the 26th of November, has broken through all of these levels. There's been no sign that this is going to find an area of support. Again, simple break and retest. We've broken above. Now we're looking for the resistance and then the continue. So the break, the retest, and the continuation. For those of you that are new, we've had the break, the retest, the break, because we've broken above this area here, and now we're looking for the retest of a major level and then continue to the upside. So what the Fibonacci is actually telling me is where this level is likely going to be. 618 is a very strong level. Put it to your own test, back test it, and you'll understand why. And what we're then looking to do is identify that this area, which is supported by our previous low here, the market is going to come back to this area once more, find a period of support, and then continue from this level. Now, sometimes the 618 does not hold, and it indeed comes back down to the next level, the 786, which is also fine because this is another major level. You'll see how the market and the Fibonacci table or drawing often mirror the same point. You can see that our 786 zone here is in line with our next major level. What we're looking to do is see where the market finds that shift. We can head down onto the 4-hour if we want to gain a better understanding, a clearer understanding. So what we're now looking to do, we've identified the trend to the upside. We've got our support that the institutions are also looking to push this price to the upside. Now I've identified the level we would like price to come back to. So there's two more things that we need to do. The first thing we need to do is wait patiently for the market to come back to this level. And then the second thing we need to do is identify a reason to enter. There's no good entering blindly. We want a reason to enter. Now, what do I mean by a reason? Well, there's a few things that I'll be looking for. First thing I'll be looking for is what I like to call an indecision candle, which is a candle that has a very small body and a very large wick. It can either look something like this. So this will be, for example, a doji candle, or I like it as an indecision candle, which looks something like this, where price has moved in both directions and actually closed very close to where it opened. There's been an indecision. And this is a good sign that the bearish move, so the retracement, is coming to an end. Alternatively, what I'll be looking for are candles which perhaps have a longer body like this, but are rejecting the 618 zone by a series of wicks. This suggests, of course, that the buyers are in the market pushing price to the upside. So the buyers are stepping in, pushing price up, which is why this wick has been created. So these are the things that I'll be looking for. And this is what I call the entry reason. So we've identified the entry area, but we need that entry reason, the reason to execute our trade, to put our money where our mouth is. So let's see how the market plays out, and I'll run you through where this entry reason would be. So let's carry on. Okay, so we are coming into our zone. Let's get rid of this blue box so we can see our Fibonacci level. We are coming into this zone. We've got another confluence in this case, luckily, is that price has near or nearabouts come into the 618 zone before, and now we're having this double bottom. We've got one bottom, two bottoms, so it comes for that second retest of the bottom. And what we're seeing now is, as I like to call, an indecision candle. Let's zoom in so you guys can see that clear. We've got a very big wick to the upside, a decent wick to the downside, and a very small body. This is telling me, therefore, that the market is fizzling out from the downwards push and is getting ready to build up. The sellers have all exited the market and the buyers are stepping in, which is why the wick rejection has happened. You can also see that from the previous candle, we've got a wick rejection. So what I'm going to do is, indecision candles are something that I like to trade. What I'll do is I'm going to put a long order in. We'll put it as an instant execution. My stop loss I'm going to have below the 618 zone. I don't want it all the way down here, because if it breaks below the 618 zone too much, I'd rather be out. There's another opportunity for me later on. So my stop loss is going to be just below the 618, and my entry reason is going to be an instant execution. Now, you will have seen me in other videos as well say put your entry where your stop would be, which would be down here somewhere. I do suggest that you do this also if you are unsure, as this reduces the risk for market manipulation and institutional manipulation. However, from my own experiences, USD, JPY, there's not a great deal of manipulation as much as there is in Euro USD or Pound USD, for example. So we're going to have this as an instant execution with my risk just below. Now we're going to be trading at least a 1 to 3. That way I can be wrong 7 times and still be profitable. I'm not saying I am wrong 7 times, I'm certainly not, but that's how we want to play it as competent traders. So initially I want my target up here. However, as we know and we've identified, the JPY likes to continue this trend to the upside for a very long period of time. So what I'm actually going to do is have an initial target of here, but I'm going to be looking to target perhaps somewhere around here, and we'll modify our trade as we go along. But let's draw, in the meantime, my target 1, which should give us a very nice, what have we got there, 1 to 7.5 risk, and we'll try and aim for a 1 to 10, let's say. So let's grow our account by 10%. Risk 1 to 2% is what I suggest. Don't blow your account and put 80% of your account on here, because you won't be able to do that twice. So we've got a very nice trade pending. Let's recap. How did we get to this position? Number 1, we identified the structure of the market. We knew this was an upwards trend. I know this market very well. Backtest the JPY over a period of time. You'll understand why I know this very well. So we know the market is moving to the upwards side based on what the trend is telling us. Second confluence, COT data, the most important point you need to be looking at all the time. What are the institutions doing? They are heavily net short on JPY, which means they're heavily net long on USD JPY. So we know that the institutions are not looking to sell US dollar JPY. So we know this trend is going to continue. There's our confluences that this is coming to continue. Next thing is, what area is this going to continue? Draw the Fibonacci from the point which created this impulse to the high, so from the point to the high, and we see our magic number, the 618 zone, come on. This is the area where we'd like to enter. Now we just need the reason, and as I mentioned, candle patterns, wick rejections, we've got a double bottom here as well, another good reason. That's our reason to hit that execute button. So trade is on. Let's see how we play out. We'll check it on the 4 hour, and then we may move to the daily just to see how we got on. Okay, so we were very close to being stopped out there, but we're still in this trade. Another good example here of an indecision candle, very nice example. If I didn't manage to get on the first one, we've got a very nice indecision candle. And here you can see the power of it. Very big push to the downside. Retracement again, impulse to the downside, comes to an immediate stop with this indecision, and then we're followed by this massive bullish engulfing candle. So we are in this chart, we're running at a profit at the moment. We were very close to being stopped out, but we're still in the trade. Again, very close to being stopped out, but we are still in this trade. This is why you don't want to have your stop loss too tight. I know it's difficult to have it. You want to have your stop loss some gap away, not too tight, not too broad. It's a very tight margin to have it, but it's these exact reasons. And again, you can see here another entry reason if we missed the previous two, rejecting from the 618 zone, as we can see, a very nice big doji candle or a hammer candle, however you want to call it here, with a very long wick rejection. So we're still in, we're in profit. Let's see how we get on. Continue. Okay, so the market is moving sideways. That's not a problem. We have accepted our risk, accepted our profit. So now all we need to do is just let the market play out. So what I'm going to do is I'm going to put this over onto the daily candle so we can monitor this over a period of days. So I'll let the music play out, traders, and we'll see how we get on in a little while. Okay, so we have smashed through our take profit one. We could, well, we'll make this certainly a risk-free trade, which you would do, but we'll keep it open so we can see our exact risk. That was about a 1 to 10, wasn't it? In terms of a target, let's have this higher. There's no reason why we should stop. Look at this massive bullish trend. Trend is the friend. We've made a new high. We've broken out. We expect then another retest and then a continuation. So the market is doing as it should be by following the trend. We can double check to see if the institutions are still on target. Beginning of Jan 2022, beginning of Jan, minus 62. They've opened a huge number of shorts, so they're opening a huge number of longs USD. We are still in this game, so let's play this out. So we're either going to trail this as a stop loss or have it as a take profit one, where we close out 50% of our trade. The decision is entirely up to you. For the benefit of this video, let's carry on and see actually how powerful our strategy is. Let's see how high we can get. Let's set it as a nice 1 to 15, let's say, and see if we get there. Okay, traders, that did not take long at all. We are now at our 1 to 15, and this happened a fortnight ago from where we are today. It did get a bit close around here, and most retail traders, what they will tend to do is close out their trade because they've been in very nice profit and they see their profits dwindling. The point is, you've accepted the risk, you've accepted the loss. Just let that market play out. We had our initial take profit one here. You could have closed out 50% of your trade. That way you take home some profit, and then what you can do is minimize your risk, so it's a risk-free trade. So if it does move against you, at least you've closed out 50%. But what we've done here is we've been patient, and patience pays in this game, and we've actually closed it out for a nice 1 to 15 trade. Very clean and simple. Traders, let me recap. Find the direction of the trend. Make sure that the trend is in a continuation of that trend. Second, head over to the Commitment of Traders Club if you're not aware, or if you do, become a member. You'll get access to very powerful Commitment of Traders reports over all the pairs. So you'll be able to see and have my analysis if you join as a platinum member of what the banks and institutions are doing with their money. This way we understand that the banks are not looking to reverse the USD JPY, and it's going to continue. That gives you the security you need. Second is identify which area it's going to be. Fibonacci is a fantastic tool to do so. And thirdly, identify your entry reason, candle patterns, chart formations, wick rejections, and then you're on to a winning killer formula. Traders, thank you so much for joining me on my return video. I will try and keep my video releases on a good schedule. So I appreciate the patience, traders. I hope you've taken something positive away from this video. And in any event, we'll see you on the next one.